Welcome to Daily Tax Minute. This is Tony Novak here to share a few points on staying out of tax trouble. Now, I've just noticed that I'm not using my normal high quality camera, so I hope you'll pardon if the quality's not up to usual, but some technical glitch I just noticed seconds ago. In any event, today's topic, we're continuing a short series about QuickBooks and taxation, and we're going to highlight some of the advantages and benefits of using QuickBooks for small business taxation. And today's focus is on the mileage tracker. Now, let's take a step back in general tax concept. Small businesses are entitled to take a deduction for mileage traveled, auto expenses, the expense of running a vehicle, but, important but, only if there is a detailed, specific mileage log for the distances driven. There is no provision to estimate mileage or make a reasonable guess. There's something called Cohen rule for other expenses where we can make a reasonable estimate. We cannot do that for auto expenses. Either you have the log in the format required or you don't. And it's as simple as that. If I tell people if they're audited, if they told me they have a mileage log and they can't produce it at audit, I'm going to say, just pay the tax. Don't even bother hiring me to fight it. Just not worth it. It's as simple as that. Now, what meets the IRS requirement? Do we have to have a book at our passenger seat and write down every single time we get in the car and track the beginning mileage and the ending mileage and where we were going and the purpose? No, we don't need to do that. Fortunately, technology comes to the rescue. Every version of QuickBooks includes a mileage tracker tool that can go on your smartphone and automatically records when you drive to and from places. People that are sensitive to privacy may be a little alarmed, but that's the least of our worries, frankly, at this concern point. All we need to do is indicate at a later time which of those trips were for business and which were not. And usually I find it becomes pretty apparent that a business makes fairly routine, recurring trips on the same basis. So once they're coded properly, once, twice, or three times, the AI-assisted mileage tracker tool knows from then on whether to suggest and simply ask you to confirm that these are business trips taken to see customers and other trips are commuter trips. It knows after a short while. It's not that difficult. Last point is, do we need to track every trip all 365 days a year? No. I said a minute ago that we're not allowed to use estimates. One exception is that we are allowed to use sampling. So if you run the same trips pretty much every month, and we sample a few months a year, once in spring, once in summer, once in fall, that's probably enough to meet the sampling requirement, and we can extrapolate that to all 12 months and use mileage based on that. That's something where an accountant who understands that provision of tax law can really be a benefit in providing that type of sampling, statistically valid sampling, and extrapolation. Love to hear your thoughts, questions, or feedback through social media, or reach me one-on-one at taxproblems.cpa. I'll be back tomorrow with another Tax Minute.